Picture a business owner sitting across from you, and they are having cash flow issues. They're having business issues. They're not sure what's wrong. Now, they built this company from scratch, or maybe they inherited it from a parent, and maybe that was inherited by the owner's grandparents. It could go back generations. Or maybe they bought the business because they believed in it. They know their product, they know their customers, they know how to do the work. What they don't know is why the bank account never seems to reflect all the hard work and effort they're putting in. And here's what they'll almost never say out loud: they are scared. Scared that something obvious is missing. They're scared that if they ask the wrong question, they'll look incompetent in front of the people who work for them, or their advisors, even the people they're paying to give them advice. They're scared that the problem is them. Now, look at the team around them. They're good people, they're loyal. Many of them have been with that company for years, and some of them have never worked anywhere else. They learned their jobs here, and the way they learned their job was often from the person before them who also learned the job here. Nobody's ever sat down and explained how their decisions, the decisions each team member makes every single day, moves money in and out of the business. Nobody ever taught them. Now, you walk in as an advisor, and your instinct is to fix the numbers. But the numbers are not the problem. The problem is that you walk into a room of people who are doing their best with what they know, and they're led by someone who is quietly terrified. And nobody in that room has ever had a real conversation about how cash really works. And that's where you start, not with the spreadsheet, with the people. Stay with me until the end, because in today's episode, I will give you one specific action item that you can take this week to help a client become a more confident business owner, and you will become a more confident cash flow advisor. I'm David Safir, and I'm the founder of Cash is Clear Learning Systems, where we turn financial professionals, accountants, bookkeepers, CPAs, anybody who's involved with numbers, into confident advisors, cash flow advisors, fractional cash flow officers. And we give them the ability to help their clients and become an advisor that their clients trust and rely on. Let's talk about the person at the top, the owner. Because if you don't understand them, nothing else you do in that company is going to make a difference. And most business owners with revenues between $1 and $20 million did not get there because they mastered accounting or finance. They got there because they mastered something else. It's sales, operations, a trade or service that they learned, and maybe even relationship building. But accounting and finance are the things they figured out as they went. And for a long time, figuring it out as they went was good enough until it wasn't. By the time you get in front of them, they've usually been living with their problems with cash flow for much longer than they will admit. And they might be seeing a profit. And that's what they know, profit and loss. But they've also been watching their bank account, and they've been moving money around and maybe hoping receivables will come in sooner before the payables need to go out, and maybe borrowing money. They've also gotten good at managing anxiety, but the anxiety is always there. Now, what does that mean for you as an advisor? It means that the first thing you have to make safe is not is the fact that they do not know how to fix their own situation. Because until a business owner feels safe to tell you they actually don't understand, you will be solving the wrong problem every time. You'll be chasing symptoms and not be able to get to root cause problems. And the way that you make them safe and feel safe is not through technical competence. Technical competence is a hard skill. What you need is a soft skill. Now, for those of you who are joining me live, welcome Kenneth and Amar and Victoria. Glad you're here. A lot of you will be watching on a recording. I won't be able to answer questions live, but if you ask me questions, I will answer them once I'm off the show. So it's not through technical confidence. They assume that you are technically competent when they agreed to meet with you. So you don't have to prove it to them again. They even think they need a technical solution, but sorry, you start making them feel safe when you stop being the impressive expert and you start being genuinely interested in them as a person and in their company. And their company is their baby, it's their business that they've nurtured and grown. They need to know that you care. You can also make it safe by asking them questions that invite them to think and give opinions and feelings and not answer technical questions that make them feel tested. So here's something you can try the next time you sit down with a business owner. Ask them, if you could wake up tomorrow and wave a magic wand and one thing about your business situation was magically different, what would it be? Allow them to fantasize. That one simple question does something really powerful. It tells them that you're focused on what matters to them and not what is interesting you. And then the answer almost always points in a good direction. This is to start looking for source cash flow issues or source issues of whatever problem you're dealing with. And that's where you can start moving forward. So let's take a shift now from the business owner to their team. Let's talk about why the team is not the enemy. And this is where a lot of engagements can fall apart. If you get a business owner to agree to whatever recommendations you're putting together, the plan makes sense, and you've identified key strategies that would move something. It might be a little, it might be a lot, doesn't really matter. But without the team on your side, nothing will change. Why? Because not that they're resistant, not because they don't want things improved. By this time, in a lot of companies, they're small. People know they're having challenges. They want things to improve, but it's because you need them to understand what they're being asked to do differently, why it matters both to the company and what it means for them personally. Let's take an example. Accounts receivable. You've got accounts receivable clerk who's been sending invoices the exact same way for years. And now you're asking to make a change to her process. It's not the business's process. She built it, she defined it, she trusts it, she is comfortable with it. And now somebody's coming in from the outside, and that's you, and telling her that it needs to change. From her perspective, she is being told what she has been doing was wrong and is wrong and it needs to change. She doesn't understand that she's part of a process and it's causing cash flow issues. And nobody ever connected those dots. Let's take another example, an operations manager who approves the vendor payments. He knows the vendors, he has personal relationships with the vendors. And when he accelerates a payment and pays early, he's not thinking about cash flow strategy. He's thinking about that relationship and about the last time the vendor did something for them to make his life easier and his team's life easier. And then you come in and say, please pay on time, but not early. What he hears is that you want to damage a relationship that he has spent years building and that you are taking control. These people, whether it's accounts receivable, accounts payable, they're not people that you can manage around or work over. You're not going to be able to do it from the top down only. These are people who need to be brought in and they need context. They need understanding. They need to understand the bigger problem and how what they do impacts the rest of the company. And they need to feel that they are part of the solution and that their role is respected, not being criticized. Your job as an advisor is not just to identify the correct strategies, it is to help people understand why those strategies matter and to show them how to do something differently in a way that makes sense in their world. Here's something I want you to write down. If you don't learn anything else today, this is the most important idea this entire conversation. Mindset is not a soft or optional topic. Let me repeat that. Mindset is not a soft or optional topic. Mindset is the mechanism of change. Every cash flow strategy I teach, and now I'm up to over 230 cash flow strategies as part of the Cash is Clear Learning Systems advisory program. Each one of those strategies is technically straightforward and relatively easy. Kenneth, I'm going to just shout out to you. Thank you that tonight's conversation is so delectably, scrumptiously delicious, edible, tasty, good. I appreciate that shout out. So every cash flow strategy I teach is technically straightforward. Just a few of them are, shorten your collection cycle. Okay, that's pretty straightforward. Review your recurring expenses. Super. You should be doing that every month. Focus on high margin products. Easier said than done, but still straightforward. Optimize payment terms. Okay, that might take some time to implement since it's got to be negotiated, but they're not complicated ideas. What makes them hard to implement is not the complexity of those strategies. What makes them hard is that they require people to think about their work differently and to change their habits. And thinking differently and changing habits is hard. And it is uncomfortable. Most people do not want to change. It means, in part, to admitting that the way you've been doing things, possibly for years or decades, has been not the best way to do it. But that's the mindset shift. And it has to happen before any strategy can truly take root within an organization. So, how do you create the shift? You don't demand it. You don't lecture people into a new way of thinking. It will not happen through lectures. You need to create the conditions for that mindset shift to take place. With a business owner, it might be walking them through how a 13-week cash flow model works and showing them the addition and subtraction. It's simple. This is not accounting. And I've seen it happen in one to 2 hour meeting where business owners are confused about their financials, and showing them a 13-week cash flow model completely opens up their minds to the fact that money comes in and money goes out. Simple, right? But nobody explains it that way, and that there's timing involved. The enormous amount being there. Let me give you an example of a gap in language. There is an enormous difference between a business owner being told their collection cycle is creating a cash gap and a business owner seeing how the cash gap appears when you shift things from a 30-day collections to a 40 to a 45 to a 60-day collections, and things move on the cash flow spreadsheet and bank balances start going down. They can see numbers moving, and it's in a projection that they help build. The one side creates defensiveness, the other one creates ownership. So let's shift over to a team. With a team, it might be a simple conversation that could start with, "Hey, I want to show you something that surprised me when I first saw it." So it's something that you were surprised with. And whether or not you were, it's not the important thing. At some point, you learned these exact same concepts and you were surprised at some point. So I was surprised when I first saw it. Can I walk you through it so you know how what you do connects to the company's cash position and how much money is in the bank? That framing is not threatening. It is not saying they're doing anything wrong. It is inviting them to learn. It positions you as someone who is sharing something interesting, not somebody who is blaming and finding fault. When people see the connection between what their daily actions are and the company's financial health, something shifts. And the shift may or may not be dramatic. It could be a quiet whisper, it could be a thunderclap moment. It doesn't matter. What matters is the shift happens. And when that happens, the change is permanent. And that is the only thing that produces lasting change in a small business. So let me make this more concrete because I'm talking about a lot of abstract terms. We're going to talk about connecting, mentoring, and teaching and what they actually look like. Connecting looks like asking questions and listening without rushing to solve problems. It looks like showing up and being curious about the people before you and the person you're talking with before you're curious about the problem. You're curious about individuals and what they do, their well being before the problem. It looks like remembering the business owner's identity, who they are as a person, is absolutely wrapped up in the company and its success, and honoring that before you suggest changing anything about it. Now, let's talk about mentoring. Mentoring looks like walking beside somebody as they figure something out rather than handing them an answer. When a business owner asks why their cash is down, even though they've had a great sales month, you could just explain it, but there's a better way. Ask them what they think is happening. Let them reason through it. Your job is not to hand them short term answers, not to hand them a fish. There's an analogy here. You're not, if you give somebody a fish, they eat for a day, you teach them how to fish, they fish for a lifetime. And that's what we're trying to do. Sorry, they eat for a lifetime. We are trying to teach people how to make permanent changes within their own organizations. And by leading them and asking them questions and allowing them to figure it out for themselves, that's mentoring. And it's your job to go from question to question, not to give them the answer. That builds their capacity and your relationship at the same time. Teaching looks like plain language. The smartest cash flow advice uses the simplest words. If you explain something and the person's eyes just start to glaze over, or they start looking sleepy, looking out the window, you're giving them information. It means you've lost them somewhere. Go back, find a simpler version to say the same thing. It is not because they're not intelligent. It is because the concepts are new and you are speaking in jargon that creates distance and confusion when they need clarity. One of my favorite plain language explanations is when a business owner asks why their profitable business is short on cash. Here you go. And you can write this one down. Um, your profit tells you what you've earned in theory. Your bank account tells you what you've collected and deposited. Until your customers pay you, the profit is just a promise. That one sentence opens up an entire conversation about collections, timing, accounting, accrual, and what's included and not included in the cash flow statement that's in or may not be in P&Ls and balance sheets. That's the work, opening up the discussion, not the ratios. It's the conversation. Here's the action item I promised you. All right, this week, before one of your client meetings, write down two things: the name of the business owner and the name of the person on their team who's most directly involved in a cash flow strategy that you'd like to work on. Then decide your goal in the meeting isn't to present anything. Your goal is to ask a question from each person and listen for the answer. Here's the question for the business owner. It's the if you could wave a magic wand and change one thing about your business situation tomorrow by magic, what would it be? For the team members, this is the way you would ask a question. Can I show you something about how what you do connects to the company's cash position or how much money is in the bank? I think you'll find it interesting. And then you can have those two conversations done right. It will be do more to move the cash flow strategy needle than any kinds of reports or graphs or charts that you could show them. If you want a practical point for starting strategies, then go out and get my ebook. And you can bring this into your conversations. It's an ebook with practical implementation advice for 24 powerful cash flow strategies that your client controls, that they can implement. It's a great foundation, and it's yours, no cost. www.cic60.com. Hopefully, it's in the show notes. If you look there, go get it. Yours for free. Today's episode was brought to you by Pivot. It's a cash flow boot camp that will be May 25th through 29th. If you're interested in getting a concise, condensed um, learning experience with other people who want to learn about cash flow and how it impacts small businesses, come join us. Learn more at pivot2026.com. Again, in the show notes. I'm David Safir. It was a pleasure being here. And remember, until next time, be the confident cash flow advisor your clients want and need.